What's up, everybody? Jerry with Dippin' Trading here for another video. This time we are going to be talking about GEVO, or Gevo for short. Again, this is a new zero emission fossil fuel that is currently under development. Now this company, they were waiting for some news earlier this year, and then it just started having a massive sell-off. If you guys haven't been keeping up with it, let me jump out so you can see. I mean, we got all the way up as high as 1557, and this was back in middle of February or so, and then pretty much ever since then it's been in a sell-off. And we finally had a bounce, and we've had a little bit more of a sell-off, and then finally we had another bounce. So just going to run through the technicals here, kind of give you guys an idea of what I could see happening over the intraday tomorrow, as well as kind of what I expect for the company overall. So real quick, so today it finished pretty much net neutral on the day. Not a whole lot of volume. Total volume was 8.19 million. So really not a whole lot of activity, which is obviously, it's obviously, you know, it will obviously reflect in the price on the day. So $6 even on the day, down a penny, 0.17%, and then the after hours pretty much no moon at all, just stayed right where it was. So what I see, I mean, you can obviously tell these two different levels that I marked, and I marked these on Tuesday, kind of what I was expecting to see. We still have that major level of resistance at $6.29. We have pretty much just bounced off of that, and then we would consolidate in after hours. Then we'd have a little bit of a sell-off start intraday, just like we did, you know, on the 24th. So we ticked up after hours, sold off in the pre-market, and then took off from there. So it's pretty much been a relatively repeatable pattern. I would expect there to be some sort of dip tomorrow, just like it has been the last 3 days. And then I would expect kind of a bounce from there. Now, one thing to keep in mind, if you guys if you're not up to date in terms of like the most recent or bullish or bearish terminology. So one thing I like to look at specifically is the RSI. The RSI is the relative strength index. And typically when you see anything that's either around this 30-point range, that indicates that it's being oversold, or it's in oversold territory. And then when it's in the 70-point range, that means it's in overbought territory. So typically, this is a good indicator for if you're looking to plan on entering a trade. A lot of folks get in whenever this RSI is down super low, indicating it's oversold, because nothing will stay oversold forever, and it typically will have a bounce whenever it does have the buyers start to step back in. Same thing with the RSI on the 70-point scale, that whenever it's overbought, that tends to typically favor the bears, because a lot of times people start to exit their positions, and then it just becomes a self-fulfilling prophecy, because people will do what's called panic selling because they don't want to be holding the bag. So anyway, I digress. So this here, kind of what I'm expecting to see tomorrow. Now, what's good and what's really intriguing about where the chart is right now. So you see in the RSI right down here, you see how it's starting to head upward towards the 70-point mark. So it's in an ascending level here. But on the chart, you see how it's just trading sideways. So this is called bullish divergence. Now, a lot of the times, now not always, but a lot of the times, this is an indication, of a trend that bulls are starting to step back in and are starting to buy again. So over the last few days, anytime I've seen, and we had it here, so we had pretty much that consolidation again. And then we sold off from pre-market, and then we ripped from there. So it's following that same pattern. So I would expect us to continue this upwards trend, have a sell-off in the pre-market, and then hopefully bounce. And I'm hoping, honestly, we can break that 629 level. If we do, next level of resistance is around 643, 650. And then from there, it would be 690 or so. Now, it looks like we have probably another one like just at around 658, give or take 660. But that to me isn't going to be relatively significant, because 690 is so close to 7. And again, ideally, I mean, I'm expecting this thing to get back up to that $9 range where it was in the middle of June. So again, every positive indication always has some sort of opposite effect. So I'm going to kind of talk to you about like what the worst case would be hypothetically. So if we don't get this and we break down, we have levels of support at 591, another at 584, and then we have another here at 566 and then 558. So I would expect if we do get a dip down, any sort of bounce. I mean, obviously this has been a pretty significant level of support here because we've hit it 1, 2, 3 different times over the last 3 days. So I would consider this a relatively strong point of support. So I would be, especially with the amount of volume that we've had here recently, I would be shocked if we broke this level. So I'm really honestly expecting some sort of bounce tomorrow, and hopefully we can get this thing in the week green. So anyways, that'll do it for this video. You guys know what to do. Hit that like button, smash that subscribe button. If you have any comments, please be sure to drop in the comment section below, and I will see you guys on the next one. Thanks.